Okay. Welcome back. Welcome back. We are done with the cash market. Um, Not too exciting. The VIX did start to come down. Currently, what I've got on the screen are the S&P futures, S&P mini futures. You know, up at the moment. Let's see what the index itself did. So the index finished up 0.48%, up to a high, or not a high, but up to 4175. So, it's headed up, right? Kind of what I thought was going to happen this week. I'm probably a little bit too big, which is why I've been paying a lot of attention to it, needing it to go up, right? But that's not what you want. You want to be comfortable in your position sizing. So, that's what the market did. Let's zoom in here, get a little closer look at how it performed today. So really, just kind of opened up, didn't really go anywhere for the first hour and a half, and then shot up a little bit. So that was pretty fun. Then kind of bounced around from there, but really, yeah, not up too much. But it didn't go down, so I made a little bit of money. My long only account was up a little bit, which is fine. I'm mostly in cash in that account, and so I took off my hedges. Mainly my hedges were like emerging markets, Japan, Europe, and so I took off those hedges because the dollar. Let's get it here. The dollar index. So we've got the daily chart here in the middle. Obviously, it's super bullish from a long-term trend. But on the daily, it does look like that momentum has broken. And so I took off my emerging market hedges. Might even. I mean, I'm not getting long Europe, but Europe might be able to rally from this point if the dollar does start going down. But what we saw all day in the dollar sold off into the morning, and then it rallied all afternoon, or for the whole day it rallied. And so that did kind of put pressure on a lot of different things, probably kept the VIX elevated. Again, we do have the FOMC meeting tomorrow where it's likely that they're going to do a 50 basis point hike. Anything different, and I'm not quite sure what to expect. I am long the S&P, but it did look like tech, like the XLK ETF. This one might rally tomorrow. So we're going to zoom in. So that dark green doesn't look very good, but overall on the MACD here, you can see kind of a little trough with building momentum forming here. On the squeeze indicator, you can definitely see it's getting a little bit stronger. Volume is okay, but more importantly here on the daily chart, squeeze is looking a little bit better. MACD is looking a little bit better. So it did come off of the Bollinger Band, and this is kind of coming over here. I know you can't see this very well, but I mean there's roughly support at 139.90, just in that area. So there's support. This is a little bit lower than where the support is, but support is roughly where where this 4-hour Bollinger Band is. And so yeah, I took a little position in the semiconductor SOXL. It's the leveraged semiconductor ETF. Took a position here right at the end of the day. Actually, let me refresh all of this. Sweet. So it's going up here in the post market, so that's good. But yeah, I mean, this looks really bullish. I did have the AMD call option. I sold it this morning. Made, it was like $140 on it, so that was pretty sweet. But I didn't want to hold it because it does expire this week, and when you're trading options with that short of that short of a time frame, like, you got to get in and get out. But it does look like semiconductors are going to rally. I know Biden was saying that we need to do more for semiconductors and chips and things like that. So feeling pretty okay. Not a very big position in this, again, because, like, with VIX flirting with 30 every single day, not really trying to get too big with anything. And then on top of that, it's not like the economy is really growing in all the areas that it would need to in order to justify, like, going to a full size and pretty much anything. Maybe the dollar, but not at this point. I did start to build into my gold position, so I am. I think I am a little bigger than half size in gold, and so gold, I consider it a currency, so I can go up to 12% in that of my entire portfolio. So I'm a little bit bigger than 6% in that at the moment. That was up a little bit on it today, and so that it going up kind of justified adding a little bit more. So I also started a position in GDXJ, the Junior Gold Miner ETF, because I was sitting there looking at, like, gold miner after gold miner, and they all look pretty good on the daily. Looking at that MACD, and then again honoring kind of this Bollinger Band in a way, but it does look like that they're at support. Pretty much all of them are at support. So that was Newmont, Barrick, very similar, sitting on support. Again, and these one-offs, it's not uncommon for market makers just to do that, just to shake retail out. And so that's a trick that you got to learn how to sit through. Then, Sandstorm not looking as good. This is one that I do like, but I don't have any shares in it right now. I think I saw, I don't know, somewhere in here when that MACD broke bearish, I got rid of it. Because MACD is a good indicator. And then I think Rand Gold. Let's see. No, I didn't look at this one. That's it, Royal Gold. This is what caught my attention initially, was how this was just perfectly sitting right here on support. So that initially got me looking through the different gold miners, and they all look the same. So got into that. But let's go through the charts that I normally go through. So looking at the S&P futures, still continuing that uptrend. It is short term. It is new, but it is going up. And I think as long as the Fed does like a 50-point basis hike, maybe even a 25-point basis hike, which I don't think they're going to do. I think they're going to do a 50-point basis hike. I think as long as they do that, the market's going to be okay with that, because they just want some predictability. And, if the dollar comes off of that 103, if it gets below 103, I think markets are going to go up. So I think that's kind of the setup we're looking at here. So still sitting through this volatility. but everything is looking okay. But I did buy instead of, so what I should have done is I should have sold like puts and like hedged it with like buying a put. I should have done that on the S&P on Friday instead of just going long a call, because the premium is just I paid too much for it. So I am in the money, but I am not positive. I'm down on the position. So that was my fault. I should have seen that one coming, but got too excited. But anyway, so here's the NASDAQ. So I think like I was saying, I think there's a good chance tech rallies tomorrow. So NASDAQ kind of setting up for that. And then we'll go back to the S&P. So I think the NASDAQ looks a little bit better than the S&P at the moment. But obviously the two biggest components of both of those are the same. So when one goes up, they're both going up. So it's either or. Russell 2000 looking pretty good. This is heavy with banks and energy stocks, so that should do well tomorrow, I suppose. Again, here is the dollar. So looking at this MACD, it's definitely broken that bullish momentum big time, so that's why it's going sideways. And so I would like to see it come down, because then I think equities could go up. But we'll see. It's definitely overextended on the daily. And looking at gold, this is the gold futures. Still not looking great on the daily. On the 4 hour, it looks fair. Not really looking too inspiring on the monthly either. But we'll see. I mean, the good thing about gold is it doesn't necessarily move all over the place. It can, but like I'm not in my biggest position in it, and I am up on the position a little bit, but not much. So I'm gonna be patient with that. And one trade that did go against me today, of course, bonds, of course. I similar to the dollar, I do think we have kind of broken that upward momentum, but it came down here to, what was our low today? About 2.945 on the 10-year yield, and then it went straight back up to above 3. So, frustrating. But that upward momentum has kind of come out of the 10-year yield. So we'll see tomorrow. And again, I think tech's going to rally. So popped up a little bit. And if tech rallies, I think the yield's probably going to come down. But you never know, all right? Because inflation is a thing at the moment. So crude gave back a little bit today. It was down 2.5%. I did enter into XLE again today. So that looked pretty good. It looked more bullish than most other sector ETFs. So I did buy that in my long only account. Natural gas, I thought about selling my Southwestern Energy play, but I'm sticking with it. Still looks good on the daily. A little overbought on the 4 hour, so it may have a pullback. But I'm not going to buy the commodity until it does have a meaningful pullback, and it may be pretty painful when this one does pull back for a lot of people. Not for the consumer, of course. Then we got the volatility futures. So coming off the highs. So this was what sparked the huge rally yesterday. And then it did start coming down all today, which it didn't feel like it, but it's It's below 29, so that's getting into that tradable bucket. So basically above 30, you have to be very, very patient. Below 30 to 20, it's going to whip you back and forth, but it is tradable for sure. And then, kind of below 21, like, you can just go long most things. But that happened. But because the volatility index did start coming down, that premium that I paid on my SPY call option, even though SPY was going up, that premium was coming out of it. So that's really annoying. But I did buy into June. Sorry, you know me, got to check on these cats. I did buy into June, so but I think there's a good chance I'll make some money on that still. The souffle finished up today like I thought it would. Go back to the morning video. Kind of did what I thought it would. But it's not necessarily bullish on the monthly chart, so I'm not ready to jump in. But, starting to set up like it could be. Because solar has actually done okay the last 3 months, and Tesla's not a solar company, but it is part of that whole like EV revolution, future this, that, future tech, metaverse, that whole theme, the Bitcoin theme, right? And so a little bit of strength in Tesla today. And then the Ponzi down to over 2.5% today. Again, like this is a speculative asset. I'm starting to come around to the idea that it is an inflation hedge, but it's a leading inflation hedge, as in you gotta own it and you gotta get out of it before everyone starts to realize that inflation's headed up. So it is tied to like stimulus, quantitative easing, Fed balance sheet, absolutely tied to that, high correlation. Raoul Pal thinks that correlation is going to burn off at some point, and it'll trade a little more independently of other assets. But at the moment, that's not where we are. So I'm not touching it. Probably not touching it until next year. It's fine. It's money to be made elsewhere. Wheat, still not looking very good on the daily. It has, it's not come below here yet. Still not touching it. Corn coming down, so that's good for the people. But yeah, that momentum has broken. So the grains, the ags, definitely pulling back. Soybeans, yeah, they were selling that all day. Copper, same thing. Not much strength, but again, it's not going down. So, not sure what that could mean. Tips. Didn't go all the way down to where it was in the pre-market, but looks like it gapped up and then gave back everything. So, on the 4 hour, if the dollar's going to start selling off, tips might be a good place. So I'm going to have to keep an eye on that one. Then we've got the inverted curve trade, long the short end, short the long end. That worked again today. That's because that 10-year yield, or the yield curve, all the yields started going up. Then the China tech minus US tech. It is bullish, but that momentum has broken. So I think we are going to see a pullback in that. But you know, Chinese stocks are starting to look better and better. And then, yeah, the short end of the curve minus the middle of the curve, that steepened as well. So I'm going to actually get rid of that one. We don't need to look at that since it's pretty much the same thing as short end minus the long end. But yeah, so back to the S&P futures. So can we see where we closed? Yeah, the S&P ETF, SPY, that is up a little bit here in the after hours from where it closed. It's up about 22 cents at the moment. So everything's kind of setting up for a rally for tomorrow. So that could be good. Really, really hoping SPYs get up to here, this level. 4,300 would be perfect. I'm probably selling out at that point. But if there's strength through this upper risk range, definitely going to be thinking about selling out at 4,350. But looks like we have put in a short-term bottom. So this is what traders. This is how you trade. You gotta take risk. You gotta be brave. You gotta use volatility in your favor. You gotta stay in cash until that VIX starts falling. You gotta try to hit that point of maximum pain on the VIX, which is the highest it'll go, relatively speaking, in a relative time frame. Then you gotta take your risk, and then you just gotta wait and watch it fall. So I think that's what we're looking at for tomorrow. I did take another trade. Did take this trade last night because I think it's starting to set up for a little bit of a run, a little test at that 705, 706 level. But this is the Australian dollar versus the Swiss franc. So along the Aussie dollar, shorting the Swiss currency. We'll see how this does. And again, this is like fitting with that theme. Like, I don't want to be exposed to anything in Europe, really. Kind of a little upset. I took off that long Australian dollar, short Norwegian krona trade already. Because I missed this short-term bounce right here. But it does look like it's given some back. So maybe this is an Australian dollar thing. There is a structural short in the Australian dollar. So I do always want to, keep in mind that. But I'm not getting long that right now. So yeah, so I got long this because it's bullish. At least on the daily chart, it's definitely bullish. Got my confirmation that I like to have. Off the Bollinger, squeeze looks good. MACD looks good. And then you can't really see it over there, but I do have a 21, or I've got a 9-day moving average, and it is above that as well. So got 4 confirmations, and that's pretty much all you really need to determine which direction you want to take your bet. So that's what I did. I think I'm a little bit down on it at the moment. So I was probably buying it somewhere between these two candles. So a little bit down, but I think I'll be okay with it. It just may kind of go sideways, maybe a little bit down for the next 12 hours, but we'll see. So that's that. Again, big day tomorrow. Let's look at the calendar. So we got PMI composite final coming out in the morning. M4 money supply, not that that matters. We got retail sales coming out. Mortgage applications coming out. PMI composite final coming out. ISM services index, so that'll be good to walk through. And then we've got the FOMC announcement. So, and then after that, we've got the PMI composite towards the end of the day. But that ISM services index and then the FOMC, that could be a big, those are two very important things back to back on the same day. When we know the economy is slowing, we know the global economy is slowing. I think the global ISM is below 50, so that means contraction. So that's that. I'll be back here in the morning going through the charts, same charts every day, making sure we understand exactly what's going on in the market. Taking good, reasonably sized bets. Just trying to make some money.